So, hello all. This is the first video of this series which I am going to start for the analyst domain knowledge part. That where I am going to explain different terminologies, and the reason I will explain the pretext firstly why I am going to start this series. So first is the like I have written over here that imagine this, it's your first day on a banking project. The meeting starts and people starts they are telling KYC terms, AML term and LTV terms here, then Swift here. So all these terms which are related to banking domain. Other than that, there are 100 plus other terms which are existing today. So everyone in the meeting nods except you, and you understand the business analysis, to understand Jira, Agile, user stories, etc. But you don't know the jargons, basically what exactly some words you don't know. You know requirement analysis, stakeholder management. You have been doing that from 4 5 years, but you don't know how what exactly these terms are, and they are a big hindrance in understanding the client requirements. So that is the heart of the business analyst role, that you need to understand the client requirements, otherwise you can't move further in any project. So that is the main issue that I faced while I transitioned from the retail or logistic domain to the banking domain. So in this I am here to smoothen your that requirement gathering part, where you are sitting in front of client and discussing different terms with him. And I hope that this series will help. This is the first lecture, and I will bring out more sessions like this. So so this is my story that I discussed. These were the terms that we are going to discuss in the further. And this will be a short video, so you can just watch it in one go. So first one is the KYC. We all know KYC is know your customer. Basically, it is to now the government has done that. We have to do KYC every once in a year because people are changing places. Different frauds are arising. So government don't want to take any risk after the recent frauds that happened in India. So that's why they have done this KYC, know your customers. You just have to update or fill out your basic details, your address, mobile number, Aadhaar number, so that the government knows that your details are updated. Second is your email, that is anti-money laundering. Banks must detect suspicious transactions. For example, if a brand new account suddenly receives very large deposits from multiple countries, that could trigger the email checks. So in that case, the anti-money laundering law, which is in India, it comes into picture. If you want to know what exactly, like if you have heard about the Hawala Karobaris, they are famous in the northern part, especially in Delhi part, where they basically take the black money from the big businessmen or politicians, and they transport that money to safe havens like Maldives, Mauritius. You must have heard all these places, and all these small islands in the Indian Ocean or in the Pacific Ocean. There are many islands which are called as safe havens. So there, the Hawala practitioners, they hide their money. They are basically the agents of the big businessman. So that's why this law comes into picture, anti-money laundering. And the NPA, we all know, non-performing asset. The bank basically declares an NPA if the installment stops coming for more than 1 year. There are different stages in NPA, like and it is firstly it is categorized as doubtful asset if the EMI stops coming in the first 90 days. Then there's another part where the willful defaulter and non-willful defaulter. Defaulter are those which willfully they have money but they don't want to pay that. Those are the willful defaulter, like Vijay Mallya, Nirav Modi. And another is your non-willful defaulter, like if a COVID like situation comes and investor they just couldn't pay their money, so that is a genuine reason. So in that case, the bank can give them some options like haircut. The haircut is another option over here, that if the loan is of 100 crore, so bank can say that you can just pay 90 crore, or say 85 crore, and the rest of the amount you can they can waive off. So that is how the NPA works. Then next is CASA, is term stands for current account and savings account ratio. Current account is mainly not for the retail public. They mainly some like the business entities where a large amount of transactions are going on every day or every hour. Like say some coaching institute there, and admissions are going on every day. So in that case, the money gets deposited firstly in the current account, and through that it gets transferred into their main account. And savings account is mainly where we deposit our day-to-day money, our salaries get credited. That is for the savings account. Then next is your Swift is the global messaging system. Recently we all know Russia got ousted from the Swift system. It is basically a messaging system. The banks used to communicate securely through each other, and that is why the Swift is used. And we all know that world different banks, like we have RBI in India, so they also transfer, or they take loans from different banks all over the world. So in such cases, they use this Swift system. Next is CBS, that is the core banking system. This is out of the bank, whether a customer withdraws cash from an ATM transfer, so everything gets recorded in this core banking system. As a BA, you will likely encounter CBS integration. Just read about this term CBS integration on YouTube. Then next is a loan to value ratio. It's like if you have taken a 50, if you have purchased a flat or a property for 50 crore, and you have taken 40 crore as a loan, then in that case the loan to value ratio will be around 80%. Next is Basel 3 norms. These are the norms basically. Earlier there were Basel 1 and 2. Now we are Basel 3 is also old, but we are now focusing on Basel 4 norms. There is an institute in European, it's a European country. So they have declared these norms for the banks. It is an international regulatory framework designed to make banks more resilient by setting standards for capital and risk management. And you don't need to memorize these every detail initially, but it's a term you will hear in discussion. So that's why I need to remember this. And next is collateral. Collateral, we all know what we put as asset, any asset to take a certain amount of loan, be it your house or any land. Then on 10th one is a Nostro and Vostro. Nostro is our account in your bank. Basically, this system is mainly done for the international banking and cross-border payments, that a country pays in their own currency, and it will be for temporary period of time, it will be stored in other country's bank. That is the Nostro account, and Vostro is your account in our bank. Then T plus 2 settlement. We all know T plus 2 is your uh, 2 days you we need to wait after once our transaction is executed. If I bought some share today, then it will be in my account 2 days later. Currently our SEBI is working on uh, doing this T plus zero. Like I have bought some share or sold some share, and the money will be credited into my account within on that particular day only. Currently we have T plus one system. Then we have IFRS norms, is accounting principle standards that guides how financial institutions classify financial instruments and recognize expected credit losses. Then next is your counterparty risk, is possibility that other parties in a financial transaction fails to meet its obligations. That is what counterparty risk is. This is especially important in trading and corporate banking also. SOFR stands for Secured Overnight Financing Rate. It has become important benchmark interest rate and is widely used as a replacement for LIBOR. LIBOR is London Interbank Operating Ratio, where the different international banks they borrow from each other. That is a LIBOR in financial market. Then is your BRS, means bank reconciliation statement. This is typical commerce term. It helps identify differences between a company's accounting records and the bank statement. This process is essential for financial accuracy or audits. So here is another advice, that don't try to memorize banking terms. Instead, understand where each term fits its business processes. Okay. And try to learn all these terms, try to learn their details in depth, maybe not in depth, but just know that is there any other types